building an investment portfolio or a series of portfolios for our clients really does demand a lot of research, a lot of due diligence, and really a healthy dose of common sense during its sort of construction process. Now at Capital, we run 5 model portfolios along the risk and return sort of spectrum, from, as you would expect, a sort of a low risk, low return through to medium and sort of high risk and return. And all of those benefit from our investment process. So our investment process is really a 3-stage model that we've been running successfully for over 10 years now. So stage 1 would be reviewing the asset classes, so the things that we can potentially invest in. Number 2, the selection of the funds. So if we've designed the model portfolios, what fund manager is going to be employed to run certain aspects. So design the portfolio. Stage 2, find the best fund managers. And stage 3, just keep reviewing all of those decisions, making sure that they're fit and robust for the future. So it's a 3-stage process. So if we look at that in a little bit more detail, so stage 1 is the asset class review. So actually there's lots of different areas that our investors or our portfolios could invest in. So we can name a few of them. So you can invest your money in sort of cash. You can invest your money in property. That's an asset class. Company shares, emerging markets, gold, commodities, hedge funds, all of these things people no doubt will have heard of. So all of these really have to go through a screen. What should be included and what should be excluded, and knowing, the why. Why are we buying some of that, or why are we excluding some of this? And so it goes through really a 6 sort of stage criteria. And if an asset class gets a sort of a green light in all 6 areas, then it's definitely worthy of inclusion. Some asset classes tick quite a few boxes but might fail on a couple of areas. So therefore they would go on what we call a watch list, which is that we like them, but they're probably not quite ready for inclusion yet. And there will be some asset classes that unfortunately get a few sort of crosses in the box, maybe the fact that they don't really enhance the return compared to another asset. So stage 1, review all the various assets. We filter that down. We have then a list of assets that we do feel should be included in the portfolio. So the final stage of stage 1 is then to look at the assets and say, right, if we've got this basket of assets that we want to invest in, how should we allocate it? So do we put 5% in property, or 10% in property, or 15%? So we use a number of metrics to evaluate what the optimum blend is for all of those 5 model portfolios. So once we've completed the asset screening and then we've designed our 5 portfolios, we move to stage 2, which is to find the right funds or fund managers to manage each area. Now in the UK, there's over 10,000 funds, so they need to go through another deep screening as well. So we screen down to around 100 of what we consider to be the best funds in most sectors. And again, we've got our in-house criteria for what a good fund looks like. We get down to those 100 funds, and then we do a deeper dive into all of those. And eventually we'll come out with really our very best of breed. And for most areas, we will have 1, 2, potentially 3 fund managers that we feel could run each component part of the portfolio. So if you think of it as a football team, we've got our first team, but we've also got our substitutes as well on the bench in case we need to make any changes along the way. So we design the portfolio, we choose the fund managers that we think are the best to do the best job for our clients, and then stage 3 is constantly challenging what we do. So we have an in-house investment committee, and the role of the investment committee is to make sure that all of the previous decisions that we've made are still relevant today. So if you make a decision a year ago, well, the world can change in a year. Where are we today? So where's the regulations? What tax environment are we in? What legal environment are we in? What's the state of the market, the global economy? Have there been new products that have been launched? What about those areas that were on the watch list? So our investment committee meets every quarter, so every 90 days as a structured meeting to go through all the due diligence that you would expect. But of course, we're looking after our clients' money every day. But I think that they can rest, peacefully that we have this dedicated process, and we've now got, a really robust 10-year track record that shows that we're delivering really good returns and really good value for our clients.